Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you get some good trades. For those of y'all who trade the dots Guppy method, today I'm going to share with you the no trade zone. You ought to be aware of the no trade zone because if you get in the no trade zone, you find yourselves with a lower probable trade. Now, I'm kind of joking with you a little bit because really it's the no trade look. I've had some folks write me today and say, hey Dean, the market moved to the sell target number 1 or the market moved to the buy target number 2 and the dots Guppy wasn't exactly the right way it's supposed to look and I missed a trade. Well, in my opinion, if you don't have the proper setup, you don't have a trade to take. There wasn't a missed opportunity. We as traders need to be aware of what is the right look. What's the right trade to take? Just like Major League Baseball players, they've trained themselves to know what pitch to swing at and what pitch not to swing at. We as traders should be doing the same thing. Wait for the proper pitch, wait for the right setup, and then take action. Take a look at your chart. If it's not there, let go of the mouse, step away from the keyboard, and go do something else. Now some of you may say, but Dean, I'm looking at my charts, I'm analyzing them, and I kind of see this and I kind of see that. Well, you're doing yourself literally a disfavor. The longer you look at a chart, the more that chart looks the way you want it to look. You're mesmerized by price action, and you think there's something there that really isn't there. So if you know your rules, you know the proper setup, and I recommend when you have a good setup, take a snapshot of it. Print it out and stick it next to your computer so you can look at your charts, then look at that snapshot, that picture of a good setup, and say, does that look like what I see on my charts? If it doesn't, then you're in a no trade zone. Don't take that. Now let me show you with the New Zealand dollar here a couple of no trade zone scenarios. Here we have a situation where the long-term guppies are flat. As a matter of fact, the long-term guppies are showing upward movement. But we see here that something took place which caused the short-term guppies to move down with this big short candle coming down to about the sell entry. Now this is a no trade zone. The long-term guppies are going in the opposite direction of what the short-term guppies are doing. Some traders call this clawing through. The short-term guppies are clawing through the long-term guppies. We don't get into this, and as we can see, nothing happened. It failed. There was a low probability and it pushed right back to the daily open. Now this is what gets a lot of people in trouble is that, well, but Dean, right here, as this was pushing up right here, it started rolling over. You're anticipating a potential move, which may or may not take place. And as you can see here, the market moves up to the buy entry. It pushed up a little bit higher and then it failed. And what did it do? Fall right back down. Again, what we're looking for is the long-term guppies and the short-term guppies moving in similar direction. Later on in the day, we had that. We had the situation where we had this little rollover here. The market started coming down, and by the time we got to the sell entry right here, boom, there we have it. You can see that the 15 is under the 30 is under the 55. This is your trade zone. This is what we look for. This is the trade look. And the market moved down and literally pinned down right at the sell target number 1. And one other thing I want to suggest to you, we've seen over the last couple of days that the market has been pretty choppy. As you can see with the New Zealand dollar, the average daily range over the last 5 days has been about 135 pips. Over the last 2 days, we've seen the market get up to about 95 to 99 pip range. So it's not to its full size and it has no real direction. One suggestion I'm going to give you that will help you identify the no trade zone is simply this. Go take a look at the 7 major pairs. The Euro dollar, Pound dollar, Aussie dollar, New Zealand dollar, Dollar Swiss, Dollar CAD, Dollar Yen. Go take a look at those 7 pairs. If those 7 pairs seem aimless, directionless, lot of chop, probably all other pairs related to those, they'll probably be the same way. What I'm doing when I trade is I look at those 7 major pairs and I'm looking for 1, 2, or 3 currencies that show direction and have potential favor in that direction. That's the pairs I look to trade. I'm not going to be looking at something like the New Zealand dollar. Now let's take another look at the no trade zone. You take a look at the Aussie dollar. Do you see a couple of no trade zones in the Aussie dollar? Like the Kiwi dollar, we had a situation where this was going sideways, a big move down in this short candle. This is a no trade zone scenario. When you get down here like this at the sell entry, short-term guppies pushing through, long-term guppies are not right. Even though this pushed down to sell target number 1 and eventually pinned down to sell target number 2, this is not a trade to take. This is not a pitch to swing at. In this case right here, when you see this sort of thing, you should let go of the mouse, step away from the keyboard, go do something else. Don't get mesmerized into thinking I've got to take this, because this could come down and just as equally move right back up on you. This is a low probability trade. And then look what happened. The market turned around, and this is the emails that I've been getting. Dean, it was kind of there, not really there. It was kind of there, and I missed it because it really wasn't the proper setup, and it went all the way to buy target number 2. That's not a trade to take. Don't worry about it. There will be plenty of other good trades to take down the road. So last but not least, let me show you this pound CAD trade. Identify the trade zone and identify the no trade zone. In this case, we have the short-term guppies and the yellow 15 EMA over the 30, which is over the 55, hits the buy entry and works its way up to the buy target number 1. That is the trade zone. That's what we're looking to do. However, the market turned over, strong move to the downside, the clawing through the short-term guppies in the opposite direction of the long-term. We come down to the sell entry level. This is a no trade zone, but the market pushed all the way down to that. Don't worry about that. Let it go. Know when to trade, know when not to trade. In a similar situation, the market pushes up. No trade zone scenario again. The clawing through, just let it go. It's not a trade to take. So during these summer days, summer doldrums as some call it, when the market's kind of choppy and you're like, well, I could have got on this and I could have got on that. You know, the biggest thing that traders can do to themselves is talk about the would-haves, should-haves, and could-haves. We don't need to sit there and beat ourselves up on what we could have done or should have done or would have done. All we can do is what we did do, what we actually see. And my suggestion to you is to always take those best trades with the right look that have the highest probability. Well, folks, this is Dean Malone with Compass FX. Hope some of the information I've shared with you today about the DOTS Guppy no trade zone will help you in your trading. Y'all make it a good day. Get some good trades. We'll talk to you next time. Bye-bye.